Welcome to the Standard and Rich podcast, where finance meets fun. Join your hosts Danny Gallo and Jonathan Elkoubi as they navigate the complex world of finance with a touch of humor.
Welcome back, everybody, to the Standard and Rich podcast. We are joined today with our hosts Danny Gallo and myself, Jonathan Elkoubi. I'm going to start off today's episode not with the usual stock market news. I'm going to give you guys a lesson on what to look for in a company, what numbers are important, the quantitative aspects, and I'm going to use Google as my case study. So let me just walk you guys through the balance sheet and the income statement and the cash flow statement, the three important statements, what to look at. And I'm basically going to tell you guys what important factors I look at when I'm analyzing a company. So let's start off with the top line, revenue for Google. In 2019, we see consistent growth. We see 161 billion in 2019, and now it's 318 billion. So over each year, it's consistent growth, and every year it's like growing. So we really like to see this because it shows consistency in the cash flows, and the business is very predictable. That's one good thing, and a growing top line can carry the whole balance sheet. So it's very important to have good revenue and growing revenue. That's a very strong aspect. The next most important line is net income. I'm going to skip right through the whole statement. Go to the most important line, net income. Got to make sure this is growing. Got to make sure the company is profitable. I don't usually invest in unprofitable companies. Maybe I make exceptions sometimes, but they don't usually work out too well. So net income, very important. Got to make sure it's growing, as Google is growing very fast. In 2019, 34 billion, and now in 2023, 73 billion. So as we can see there, very fast growth, consistent growth yearly. That's also a very important factor I'm looking for. Now let's move our way to the balance sheet. Next important thing to look for is cash. Cash and cash equivalents, 110 billion. That's massive for a company of this size. It's a lot of cash. I don't know if anyone else in any other company has as much cash as this. I know that Berkshire does, but it's a lot of cash. So let's go all the way to the debt. So we have 110 billion in cash and only 11 billion in debt. So they can cover their debt very easily. They can pay it off and still have 100 billion left. Very conservative company. You could see that they don't know what to do with their cash because they generate too much cash. It's a good problem to have, but they're going to start doing buybacks. They're going to need to pay dividends because they can't reinvest for growth. They're having like struggles reinvesting, but it's a good problem to have. It's not a bad thing. So now let's move our way to the cash flow statement. Let's look through over here. Most important line over here is free cash flow. Well, free cash flow isn't actually a line, so we're going to have to calculate it ourselves. So it's basically cash from operations minus capital expenditures. So most places where you look for your information, like Yahoo Finance, they'll give you a line free cash flow. But on the actual reports, annual reports of the company, they won't actually give it to you. So I'll calculate it right now in my head. It's 107 billion cash from operations minus 32 billion capital expenditures. So around 70 billion rounded. It's good free cash flow. It's consistent. It's growing. You could see in 2019, it was around 25 billion and now it's 70 billion. So consistent free cash flow growth is very important. Free cash flow is basically like net income, but it's only considering the cash expenditures. So we remove like depreciation and amortization, which are non-cash expenses, and it can manipulate the net profit of the business and make it look like it's not profitable, but it actually is. So it's very important to see the cash flow statement because that'll show you if the company is actually profitable or whether they're just lying on the income statement. So that'll be it for this segment. It was short, quantitative segment on how to analyze a business and what to look for when you're analyzing your companies. Danny, what do you want to talk about this week on the news segment?
So on my side, on the news segment, I would like to talk about the correlation between the Atlanta Fed real GDP Q2 numbers and the transport and industrial stocks. So if you look up on their website for the Atlanta Fed, you could find the GDP now, real GDP estimates for 2024 Q2. So you literally see a correlation between those stocks and how their GDP estimate has been going. So they've been slowly taking down the from May 11th to June 4th. They went from a growth of 3.1% down to 2.6% to 1.8% to 1.5%. And if you look at the graph and you look at the transportation ETF, so the IYT, so that'll give you a global view of how transportation stocks have been going. If you look at it the past month, you could see literally the charts looking exactly the same. And that would be the same as well for the ticker XLI. That's the industrial select sector. So same thing, if you put it at a month and you put it side to side, you could see literally the same movement in the charts. There's been news about oil the past few weeks. So last week there was the OPEC meeting. So they decided to cut oil production to try to stagnate the oil price, but it actually made oil go down even more because it created a fear of the oil demand that was going to go on. So that happened last weekend. And now this week, well, today actually, there was an article on Reuters that talked about transportation regaining strength during the summer and the U.S. replenishing oil reserve. So the U.S. Secretary of Energy said they're looking at $79 a barrel to start stacking up again, and that created a pop at 4% of the barrels. Except for that, NVIDIA last week came out with their next-gen platform. So to go quickly around that, there was the Blackwell platform that we've been hearing about since last year. This platform is a part of the vision to revolutionize industries with generative AI, offering increased computer power for a range of applications from robotics to medical technology. They also came out with their next chip, so they're saying that they could have a new, better chip at a pace of 1 year. So every year they could have a new, more performing chip. So this one's called the Rubin. So it's set for release in 2026. These chips will feature HBM4, so that's high bandwidth memory, NVLink 6 switch operating at the 3600 Gbps. So the Rubin platform is expected to bring cost and energy savings related to new chipsets. So obviously with all these data centers that are being created, it's going to bring a big cost in terms of energy, utilities. And they came out with a bunch of different like the Vera CPU and the 6G research cloud platform. So honestly, they're hitting on every base. You could see they just split their stock by 10 today. We'll see. Right now, there's nothing really slowing down NVIDIA, so that's pretty cool to see. So there was the long-awaited worldwide developer conference for Apple today. Shocked a lot of people in a good way and a bad way as well. So a lot of people, the very bull Apple people, were very happy about it. The neutral to bear people with Apple were not happy about it. You saw the stock probably go down 2% today. And when you have a big conference like this, normally you should see a small pop because people are more enthusiastic. So they're finally bringing the calculator to Android, to Apple. So I guess that's a big plus. They're also so they're going to introduce Apple Intelligence, which is technically AI. They just didn't want to mention AI. So they're going to bring that to messages, photos, to mail, to a bunch of their platforms. They're going to introduce ChatGPT with Siri, which was pretty much obvious that they were going to do. A lot of people were pissed about that because they invested so much money in AI and they have to go see another platform to introduce their LLMs when LLMs are popping up all over the place. You have Google that has it. You have, well, Microsoft with ChatGPT, obviously. You have so many big techs that have their own LLMs, and you're the most valuable or second most valuable company in the world, and you can't even solve it when you're one of the biggest tech companies. So I guess people are a bit disappointed with that. They also came out with their iOS 18, which that too was pretty disappointing. So it's gonna allow you to rearrange icons as you want them to appear. So you no longer have to keep them in a rigid grid as you've had to since iPhone first debuted in 2007. So I guess you could do what Android's been able to do forever.
That's a real game changer.
That's the biggest game changer. You could literally take your settings button from your Mac from the top and put it literally in the middle of your screen. That is so satisfying.
That's huge.
They did also some changes on Vision OS, Watch OS, Mac OS. It's all a bunch of stuff that you could actually go just read on their investment platform, but nothing too spectacular, to be honest. That's it for the recap on the news.
Hey guys, don't forget to click the links below to sign up on Wealthsimple and Questrade to start investing. Start again. Oh wait, no, you're gonna clip it?
Sure.
So, hey guys, don't forget to click the links below to sign up on Wealthsimple and Questrade to start investing. You will get a free $25 and $50 sign-up bonus with any deposit amount over $1. And also, don't forget to like and subscribe our podcast.
All right, so you want to transition over to the stock battle segment of the week?
We can do that.
All right, so let's summarize. You have the numbers. What happened in the last weeks? I've heard it's been demolishment on my end. I've been getting crushed, and you've been destroying me.
We are wrapping up another battle. So we are wrapping up the Savaria versus Hershey battle. I won this battle. Savaria ended up in the past month at 3.94% higher, and Hershey is down 6.67% in the past month. So that would bring the stock battles right now to a 3-1 win on my side. No need to clap, guys. No need to clap. Thank you. Really appreciate it. And on the newest, thank you. I appreciate it. So on the newest battle that we had 2 weeks ago, Baba versus PDD. So we know we're taking a little bit more risk with these Chinese companies. We're just waiting for a rebound. So Baba was down 1.66% and PDD was down 2.64%. So we're hoping by the end of this battle we'll finish at least in the positive. So we have 2 more weeks on that. And we'd like to start a new battle for the week. I would let you start with this one, Jonathan.
You're gonna
with
let me
your
start?
pick. I'm gonna let you start. Yes.
Okay, so my company is a microcap called Versa Bank. Their market cap is $370 billion. It's a small Canadian bank. Let me walk you through the financials. I found this out on a post on Reddit. So you guys can find investment ideas anywhere. You just got to be looking for them. I ran through the numbers. It's very attractive. Basically, they're an online bank. They have no branches. It's all online. They have this new innovative technology that lets them work with their bank partners and lend to their customers on a very frictionless basis, and it's very quick. It's all automated online with systems. So it's a new technology. Apparently, it's already been in place in the U.S. It's already big in the U.S., but it's starting to grow in Canada, and VersaBank's the kind of company that's pushing it in Canada. It's growing. They also are starting a new acquisition that needs to go through this recently. They're going to acquire this American company, and that's going to give them a U.S. banking license, so it's going to enable them to grow into the U.S. And they also have a very important part of this investment is their cybersecurity company. So they have started a cybersecurity company. The CEO founded it. The CEO, David Taylor, he started this company. Now they have $10 million in revenue, the cybersecurity company, and it's valued at around $100 million. That's what the rumors are saying. I don't know if it's actually that, but basically we get this company for free. It's not even part of the valuation that you're paying in this company because it's so undervalued that that their cybersecurity company is overlooked at the most part. And they are forced to sell the cybersecurity company when they acquire the American bank. So that'll be like $100 million cash realization, or at least $80 million in a worst case scenario. And let me run you through the numbers. So the growth is very strong, 24% growth year over year. On their income statement, you could see strong revenue growth, strong profit growth. Their profit growth was almost double, because $42 million in 2023 and $22 million in 2022. So they went from $22 million to $42 million. Great growth over here. And if you want to look at their loans, they grew their balance sheet from $3.2 billion to $4.2 billion. So they grew it by $1 billion in a year, which is almost around 40%. And they're just a fast-growing stock right now, and I think they will continue to grow like this in the future at only an 8P. So we have fast growth, low price, hidden value with their company, their cybersecurity stock. I think it's all around undervalued company and a great buy as a long-term investment. Remember, guys, this is not financial advice, but I'm just giving you my analysis. So these contests are obviously short-term, so I cannot predict what the price is going to do in the short term. But if the acquisition goes through, I will be beating Danny in the short term if the acquisition gets approved, which I'm hoping it will. So, Danny, let's pass it over to you. What stock have you picked for this week?
So I am picking McDonald's. So McDonald's has been pretty much beaten down in the past few months. It went from $300, now it's $250 if I'm not mistaken. So I've been looking at this one, even wanting to add it to my own portfolio. I think it's just getting beat down for no reason. So now you have the McDonald's value package that's coming back. So I think it's going to be like a $5 package. That should attract more customers to their stores. McDonald's, the thing is, when you're a franchise, you're making royalty on every single sale that restaurant is making, right? So if it's making profit or it's not making profit or it's making good revenue, as long as it's making good revenue, they're making a lot of money off of it. So even if their franchisee are making 4% on it, as long as they're, well, I said negative. You don't want a store to be negative, obviously, because or else they're going to close, which doesn't happen often for McDonald's anyways. But so you want to attract the most customers that you want to generate revenue to the store, because let's say you have a cheeseburger that's at $5, let's say, or whatever they're going to put on that value package at $5. Well, they might sell something else that's on it, like a McFlurry at $6. So right there, you still have $11 per customer. So you could go grab somebody that's going to grab something else than just a McValue package. They also plan to open 10,000 new stores worldwide by 2027. So that's its most rapid expansion phase in history. They have strong profitability They've been, if I'm not mistaken, their free cash flow is like 29% of every dollar they make. They also have, so they're going to, in those 10,000 new stores that they're going to open, 900 are planned in the US, about 1,900 in the international operated markets, and roughly 7,000 in international development licensed markets. So with 50% of these openings planned for China. So around 5,000 for China. So they're also expecting 4% in same store growth sales in 2024, and about 4 to 5% growth from 2025 to 2027. That's annual. And so right now, by people, every McDonald's they have in the US is for one store. It's per 25,000 people, right? So in France and UK, Germany, that's one store per 45,000 to 60,000 people. And in China, it's one store for 280,000 people. So it really, they really could go get more bang for their buck. And also they're starting to expand in India. And in India, it's one store per 2.9 million people. Obviously, increasing their exposure to China might be a risk for McDonald's, but they've already been doing very successful in China with their franchise system. Also, they're projected to surge to 250 million people on their McDonald's membership loyalty program. That generates around $45 billion in sales. That they think in 2027 it's going to be $45 billion in sales from $20 billion in sales right now last year in 2023. So like I said, they're going to generate more targeted promotions. They're going to not cut price, but they're going to do a value system to try to attract more people to their store, especially with grocery stores being so expensive right now. If you could somehow make it possible that selling some stuff for a lower price and attracting people to come eat out a little bit more is pretty encouraging. So that's it. They've been doing a lot of buyback and investing back into their shareholder. I just think there's too many verticals for this company. They could really cut down on staff as well. So they started the new automated system in Texas that nobody works. Nobody works there. It's mostly automated. So I really think they could exceed on expectations, and hence even like their digital sales. So we'll see. So that's my bull case on McDonald's.
I think that's why I'm taking. Yeah, I think that's a good long-term pick. I mean, we'll see what it does in the short term. I think you're right there on the AI case. I mean, they could use the AI to cut costs a lot. I mean, you're kind of like investing in AI by investing in McDonald's, because as AI gets better, McDonald's profits will increase and it'll give them more margin to work with, and obviously more growth for their profits. So I think that's good for them. I think that's a good place to end off the episode. Don't forget, guys, like, subscribe, comment, do everything you can to boost this for the algorithm. We need all your help. So thank you guys for listening, and take care.
Before we go, a quick reminder. While we love discussing financial topics, we are not financial advisors. The information provided in this podcast is for educational and entertainment purposes only. Please consult with a qualified professional before making any financial decisions. Thanks for listening, and see you next time.